York time. It is a Tuesday, May 30th, 2017. It's a daily Forex trading strategy session hosted by Forex.Today. Who's fired up? Hope you had a wonderful long weekend. Let's do some Forex, eh? Hey. So, let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Meow! Oh, Joe started the prize. Good stuff, Uncle Wayne. Right on. Yeah, hey, man. It's just the history of everything to do with oil. But you got to read The Quest as well. Not sure which one. Oh, you did the documentary as well? Yeah. Just thinking about heading out to Baku, spending some time in Baku. Still don't know if I want to go in the summer or the winter. I think it'd be great to go skiing in Azerbaijan. But anyways, hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com, open up a trading account. I'm here every day because I want you to be a success. That is the goal and the strategy of the company. We want you to succeed. We want you to thrive. Now, why would we want that? Altruism? Because we're good guys? Well, here's the thing. If you thrive, you'll trade for years and years and years and years and years. And as your account size grows, your trading volume will increase. And as a service provider, that's how we earn income. At least I'm being open and honest with you, right? Our execution speed is faster than most. Our spreads and other fees, depending on if you're on a fixed account, variable account, or ECN account, are very competitive. And our customer service is world class. And we want you to succeed. So I'm here every single day to help with technical analysis, fundamental analysis, trader psychology, and of course, questions are encouraged. So I'm here for you, man. I want you to win. I'm here at 7:30 in the morning, Monday through Friday, except for the first Friday, which is this, right? First Friday of the month, which is June. That's this Friday over here, or maybe for you, Friday's over there. But anyways, this upcoming Friday, I will be at FX Street for Trade Non-Farm Payrolls Live number 132 or something. I don't know. 132 months. Oh, is that right, Joe? Yeah. Yeah, he's a legend in Portugal. Yeah. Wasn't he the guy that got the Venezuelans involved in creating OPEC eventually? No? Maybe I'm mixing the guy up. So anyways. Oh, let's move on to the charts, huh? Guten Morgen, Karim. Yeah, Ryan said, did you know that Japanese kamikaze plane? Well, yeah, why else? But here's the thing. Japan, and then later Germany, really had to throw a lot of investment into synthetic oil and fuel. And the Japanese made theirs out of the roots of cypress trees or something like that, Japanese cypress. And they would cut down like, I don't know, like 300 trees to make enough fuel for 1-0. Crazy, huh? Not enough trees, yeah. So anyways. Yeah, well, so, if you want to get into oil, World War I and World War II were wars over oil. The war in the Pacific started before the war in Europe in World War II. And guess where Japan got all its energy? Mostly from the United States. And finally, in sort of anticipation of war going to happen in Europe, they pulled out of all the heated negotiations that the U.S. was doing with Japan for many years. Finally, they just said, well, you know what? We're just going to keep all our excess oil in preparation for this war in Europe. So they cut Japan off of all their energy. So, of course, they took over the Asia Pacific. Of course, they went after Malaysia and Indonesia, right, Singapore, places that had oil. Right? What was World War I about? The British converted their navy to oil-fired ships. Germany didn't have any colonies that had oil. So they did a deal with Iraq and started to build the Berlin to Baghdad Railroad. That wouldn't be good for the British. So anyways, whatever. Let's move on.com. I guess I got to get this out of the way. Unless you really think it was our Archbishop Duke Bishop. So, do we have charts? Can you see everything okay? Does anyone, what is it, what is your textbook claim that the start of World War I was all about? Was it really, there was some assassination of some duke, right? Duke somebody, Archibald or something. Really? Does that make sense to you? Really, the whole world went to war. Oh my God, this is what we teach people. It wasn't money, it was power. It's called oil. Yeah, and where were the first big battles in World War II? In Europe. North Africa. Why were they in Libya? Oh, maybe it was the oil. And when the Germans got kicked out of North Africa, where'd they move all their tanks? Stalingrad. Why? Why Stalingrad? It's on the way to Baku. What's in Baku? Oil. And when all the tanks in Europe, when all the German tanks and Panzers and Tigers were finally stopped in the Battle of the Bulge, was it because the American tanks were so much better? No, the Germans ran out of oil. The whole thing was about oil. The part I don't get is, well, I don't know. Let's not get into it. So, yeah. So here we are, beginning of the week. Swing, swing, swing low. So we have this on Monday, honey. Okay. Okay. That's where we were. The actual open for this Kiwi yen, because remember, this, 3 weeks ago now, is our mispricing scenario. Remember how it was falling and we said, oh, it should probably rise. Yeah. So anyways, you were here, Sunday night, Sunday afternoon, whatever, Monday morning, whatever it is for you. You could have bought it off the 200 if you were still bullish. Okay. fine. But the problem is you're overbought, right? And that's not a swing, is it? Now, why would you not call that a swing? Because you're out of position. It's overbought. You're paying too much for it. So why would it last a long time? Well, the only way it would last a long time if there's a lot of momentum behind it, and it stays overbought. But you know, being at the end of the month and all that kind of stuff, I don't know, right? So you got to be careful, bro. Especially after a big run. Right? So anyways, this is not a recommended swing. Plus, we're still at the top. Remember that? We're still at the top for the month of May's target. The month of May's, 4 weeks ago, we said where we are now, let's say anything above 70, I can't read that. I don't have my glasses. Can't read it on the side. 76.50. Anything above 76.50 is the target, like too high. That's it. Time to take profit, right? If you could take profit above that area, you're doing good, right? So as a bear, it's still pretty reasonable to think, well, if I'm going to be a bear, it's going to roll over somewhere around this M3, somewhere around the previous high. That would make a double top. So on and so forth. Huh? You don't know, but it's something that you could plan on. Remember, you're supposed to ambush. You're not supposed to be trading here. You're supposed to say, well, it's really at the high end here. We're at the projected top for the month. What if it comes down? Right? That's the what if. And you're saying that here so that it's not Sunday night or Monday morning. It's Tuesday morning. And you're looking to sell a double top, overbought, right? That's the kind of planning. Now, what if you were a bull? What would you say? By the way, I was thinking of redoing the swing trading program, doing another round, because there's not a lot I can do while I'm at Harvard, but I could do swings. Like Sunday nights I can do, right? I can go to one of the world famous libraries, get a little private room, swing trade. Any interest with that or not? Where you do the course and I meet with you live, set up the swings? Yeah. This time around, there's the coupon, by the way. You can sign up. If you have $500 at TradersWay or more, you can get a $500 discount. 501 actually. It's a thought, anyways. I got to decide in the next 2 weeks, right? Heidi says no thanks, and Tori being a day trader. Yeah, I would mix it though, Heidi. Honestly, I would mix it, but either way. Yeah, and in fact, as we go into summer, it's actually not a great swing, right? So in the summer course, it would be an opportunity really to study what might happen and then kind of go back and look what did happen in the past, and knowing that maybe the middle of June, or let's say, yeah, middle of June, which is when we would start it, sort of that July, mid-August, that 8-week period is probably not going to be a good swing trading period for like your instant results kind of thing. But it would prepare you, and you'd have enough time to go back and really look in history and study the strategy, and then be ready for the market to wake up after summer. Versus missing a month while you're learning, and then by the time you've learned it, you've missed half the season. You know what I mean? So, just a thought. I need to talk with the crew at TradersWay, see if they're into it. So anyways, oh, this is what yeah. So if you were a bull, let me go back to that. Okay. If you were a bull, okay. If you were a bull, you need to ask yourself, where's the support? And a bear, right? What does a bear ask? Where's the resistance, right? So you would do something like this even. You see what I mean? Like it's basic, but I bet you most people here still don't ask themselves these types of questions. And that's usually because they don't know if they're a bull or a bear. So why would you ask such a question, right? People that don't have a bias, they say, you know, I wonder what the market's going to do today. I wonder what I'm going to do. Like, oh, is that a buy? Should I be buying? Right? Oh, is that a Stokes cross? Is that a MACD cross? I guess I need to sell because MACD told me. And you get very inconsistent results for that, right? And of course, there's the other mistake where all you look at is your 15-minute chart. That's all you got, right? So it's different when you're a bull or you're a bear, and you start the day and you say, "Oh, I'm a bull. Okay, I want to buy at support. Where is support?" Well, support is here, and support is here. So I would either buy it at, let's say, 78,000-ish or 77.66-ish. And look, how hard was that? Was that too hard? Of course it wasn't too hard. Yeah, honey, I could do that. It just it takes a lot of time, and I just don't have time right now. Right? See, the thing is that if I do an encore version of the swing trading program, the videos are all recorded, and then I can meet people live for, you know, an hour or two a week, teaching them how to set it up based on the live market. I can do that from Harvard, right? So it's more of a matter of what can I actually do. But yeah, a scalping course, sure. Scalping is fun. I spent a whole year trading the 1-minute chart. But my overall, just to add to that comment, my overall opinion of scalping is, without the strategy behind it, it's just a lot of hard work and inconsistent results, right? So if you're going to scalp, you should be scalping into a longer term strategy, or you're aware that there's a counter trend move happening. Because let's say you're in a trade for 2 weeks, but you know during a period of that, let's say let's say the 1 hour chart wants to cycle up, so you can say to yourself, wow, you know, for the next, I don't know, 24 hours, let's say, even though you're a long-term bear, you know, you believe based on what you see, at least for the next 24 hours, there'll be a rise in price. Doesn't mean your long-term trend is dead. It's just a pullback, right? But on a 1-minute chart, dude, you could have about 19 trades, and there wouldn't be counter trend trades on that time frame. But you just know you're only going to be doing it for a half a day to a day. So you're long-term short, but you believe like today you'll be short-term long, and you could use a combination of, let's say, 15-minute, 5-minute, 1-minute charts, right? Yeah, and scalping the open is a. Do you do like the London breakout type stuff? There's a lot of advertising on that. That other crew's trying to sell you something. The problem with like those types of strategies, yeah, but your own version, right? So here's the problem with those types of strategies. They rely on the volatility of the open, which means by the time it's happened, you've decided based on what happened what to do, which means at best, you're going to pick up the lower half or even lower third of the actual move. Yeah, there you go, the London day break strategy, right? And so the problem with that is you're picking up almost like the leftovers, right? Think about it. If the strategy says zip, 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 now sell it because it broke low, but you missed all the zippy. Now you only get the low part, and then it's going to hit support. And of course, with London, there's news at about 10, right, in London time. So you get into something around 9. I mean, you're only picking up 30 pips, right? Right. So now you're saying you enter earlier. So yeah, so that would be better where you've decided, let's say, because you wouldn't know to buy or sell unless you had a strategy. Where a lot of these things that get pitched in advertising, you don't know what you want to do, so you let the market do what it wants to do. You don't know what it's going to do because you don't have an opinion, so you just let it go. And then finally you're like, oh, look, it broke out low. Now I guess I need to sell. So you're going to be punished for not having the expertise because you're never in control of what you're doing. If you were a bear and you said I wanted it to fall, then around the London Open you can identify 1 or 2 levels of resistance and sell up there, assuming that it's going to come down. Why would you assume it's coming down? Well, you have a bias. You've done your research. You think it's overbought or oversold, or that you think fundamentally one thing versus another, right? Which means now you're in control. And so why do you make money? Well, you've made a decision, and that's, if someone were to invest into you, they invest into you because you made a decision, right? If they need to make the decision, then why do they need you? So anyways, but so you can get, so that's not what I'm talking about. Those are little dog and pony tricks that are great for, advertising. Right? So, anyways, what I use scalping to do is, let's say on this time frame, which is an hourly chart, I anticipated, because of my bias, there could be, because I don't know, there could be a double top somewhere around in here, because that's where the resistance is. So we could scalp that. Okay? That's where the scalping would come in. How close to the resistance can you get in? Some people, like, if you used a 15-minute chart, right, you might be in down here, the lower low, lower high, right, 21.55 cross. So you might be short here at 78.60, 78.50, right? I guess 78.60 on the pullback, right? But a scalper would be in here. Okay? There's the difference. Okay? You'd be in up and much closer up in here. So anyways. No, don't look at it. It's stupid. It's for people that want to be lazy and not make decisions. So don't look at it, because if you do, I'll beat you in the market. Look, if you're not willing to do the work and have an opinion, I'm going to beat you in the market. Gonna whoop your hide real good. Yeah, totally. I mean, it's like, just think about it, like these things where they're like, oh, well, you could just straddle the market. Whether the market goes, up or down, long or short, you'll always be on the right side of the trade, and you'll make money. What a stupid piece of sales pitch that is. Anyways. Cool. All right, so here's our oil. Oil only made it up to 52. Dropped like a ton of bricks. And now what? Well, I think last week, once it got to the 52 and then hiccuped around the OPEC meeting, remember it did the lower low, lower high? Did we cover that? I think we covered this, right? The breakout, the pullback, right? That's the conservative trade. I think we covered that some Thursday or something, right? So anyways, here's the follow-up, because on a higher time frame, it's the lower low on like a 4-hour chart or a daily chart. Let me zoom in there. So you see, red candle, right? So you fib that, came back 50%, exactly 50%, which is fun, right? And now down. It's their little, I don't know, how do I draw this? Like this, right? Now our conversation, right, in fact, by the way, this should come down to about here, so I'd stretch it out to that. So anyways, our conversation last week was, it should and probably will, it may come back down around 52, 54, that kind of stuff, right? But when it comes down, the conversation last week, and maybe the week before, is if it comes back down, is it going to go all the way back to 44.30, which was the previous one we had nailed? Is it really going to fall that far? I don't think it needs to. Right? You see this orange line from 3 weeks ago? And you see this one here from, I don't know, 3 months ago? Just won't let me grab it. Come on, Bubba. There you go. Why don't we just say like that is more likely, and the range that we're in remains small? It's consolidating or contracting? Right? Does anyone think it should go to 44? Yeah, right. Okay. Now it didn't make it to 55, right? So to you then, Charles, if we don't go to 55, do we go lower than the 48? And by the way, how do we come up with things like up to 55 and then down to 48? That's just where the support and resistance was, right? And then the fibs and the pivots and all that kind of stuff come into play, but they're secondary. Even though they're important, they're still secondary. So some people might say, well, if it was supposed to come up here and it didn't, then it's very bearish, because they're going to look at it this way, right? And they're going to say, well, then the low should be lower. And that may or may not be true. Okay, I still want to incorporate the pivots. We don't have the June pivots yet, but I'm just thinking out loud. And I won't spend too much time because we've done it like all of last week, right? Every day we talk about it. There's not a lot of reason for it to fall further? Like, so let's talk about it. Could it fall to 44? Okay, it could fall to 44. I don't see why it needs to. Maybe because that's how people make money. Okay, fine. But I think more people make money on the way up than down. But so anyways, it could fall further. But how about like 38? Anybody think it'll fall to 38? Right? So like, are we splitting hairs here? Do you really care if it's 48, 45, 44, 40, 42? So anyways, let me continue my thought process out loud here. We're near the historic peak in oil. Oil inventories have been falling, not rising. The economy in Asia, the economy in Europe, the economy in the United States, is doing all right and seems to be improving. So, like go past 100 years, the economy globally is improving unless you live in Latin America or Africa. Then it sucks. Right? So, and and it bugs me. Why does Africa have to suck? Why does Latin America have to suck? Why can't they just get their economies together, their governments together? I mean, I know the Western world isn't perfect either, right? But come on, man. There's no reason Africa needs to be poor, right? Or am I wrong on that? I don't know. Yeah, remember that we were talking about gold in Ghana? They're like, yeah, there's tons of gold there. They're not going to sell it to you. There's no way. Even if you bribed everybody, it's not leaving. There's no way. You're right, but it doesn't need to be there. But it's unfortunate, Too bad, so sad. All right, so anyways, I'm just thinking there's reasonable reasons to think not down further. Okay, is that right, Rich? So I've spoken to experts, and he's like, he says, yeah, Ghana is interesting. You go down there, you're going to meet the seller. He needs to, you want to buy $10 million worth of his gold, right? So you say, all right, let's meet at a cafe. Let's talk about it. Let's do it face to face. So you get to the cafe. Eventually, a taxi shows up. The guy gets out and he's like, I don't have enough money to pay my taxi. Will you pay my taxi for me? You're like, dude, I'm buying $10 million worth of gold. You don't have $2 to pay the taxi? No, I don't have $2. Yeah. Then the guy next to you leans and says, are you buying gold? So anyways, I don't know. It doesn't need to be that way. That's the frustrating part. Like my visit to South Africa, what a great country. And then you turn on the TV and it's a laughing stock of the world, right? Why? Johannesburg is beautiful. I've seen images of Cape Town. It's beautiful. What a great country. So anyways, let's get out of this. So I think there's more reasons for stability here, which means I'm a buyer at support. Okay? That's all. Of course, we also know that doesn't mean it has to go up. But if we believe we're printing a bottom, then at least the beginning of a position is no further down. Buy at the floor, go for it, right? Okay, what do we got here? So, some bonehead, apparently last week, around Thursday, suggested this sucker could fall hard. What a bonehead, huh? How funny, huh? And you can look at the analysis, look at it like it's a new trade. What was going on here? Well, I could see my highlight early in the week that we've achieved the projected monthly price for euro yen. Okay, everybody get that point? It sets the stage. Like imagine you went to a theater production, a play. You don't know anything about it at all. You don't know if it's a comedy or a tragedy or a mystery or nothing. You don't know anything. It's really, it takes you a while to kind of figure it out, wouldn't it? I mean, I suppose how subtle it is. Right. If you see a guy coming out with coconuts and they're riding, horses, you're like, oh, wait, this might be a farce. But, it takes a while, right? So in this case, this sets the stage. And I'm like, oh, this is probably overbought. Okay. So it sets the stage to say, hey, maybe this is overbought. Maybe this is done. This was a heck of a rally, but that's probably it. Right? Everybody got that point? It's so ridiculously important. It's amazing that people trade and they don't make these decisions, right? All they see is, oh my God, look at euro yen. And even Bloomberg and stuff, when I meditate in the morning and I got Bloomberg running in the shower, all of a sudden they're like, euro yen, euro yen. I'm like, you're talking euro yen? Like, dude, where have you been? Right? So it must be over if they're talking about it. So anyways, obviously it's been up for a while if they're talking about it. So if it's up for a while, it's probably near or totally overbought. So anyways, this sets the stage early last week. Hey man, maybe we're topish. Maybe this pivot target for the month is going to influence some bullish market participants to take profit. Right? Bare minimum, right? Great. So where would they take profit? And you can see I already have it marked. That's a little bit precise, isn't it? Okay. And then the last part of this, as you can see, I drew a line down into here. Why here? Why this price? Why 122.50? Well, it's the previous low. So all I did was, this suggests be alert for a reversal near or at a double top because the weekly target has been achieved. The conservative, not weekly, sorry, monthly. The conservative monthly target has been achieved. Okay? And not that far from the end of the month, right? Especially with holidays and stuff. How do you think? Do you think some professionals took the entire week off here in the United States? Monday was a holiday. Do you think they just took off Tuesday, Wednesday, Thursday, Friday? They're like, we got non-farm payrolls on Friday. Monday is a holiday. There's just noise in between, right? Do you think it's reasonable that a lot of people said, you know what, I'm going to take the whole week off. I'm going to get Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday, a 9-day vacation, and it only cost me 4 vacation days. Plus, those 4 vacation days historically are not very profitable anyways. They're garbage days. So, because you know what I mean? Because we lose volume and volatility as we get closer to non-farm payrolls, right? And we don't have ISM services until after, right? You know what I mean? People are like, they just want to go to the Caribbean and party. So maybe somebody took profit here. Huh? The humanity in the chart. But anyways, we had sentiment, and we identified resistance and support. You can see we're actually not that far away from that target. It was like 122, I don't know what you want to call it, 60, 70, 50-ish, but 50 looks too low. And we made it down to 2320, right? Let's just call it 23. I mean, right? It's a drop of basically 26 to 23. It's a 300 pip, well, 250 pip drop. Swing traders know that you run the risk now that this heads back to the weekly central. So if you're going to give it a second chance, if you're going to do a second trade, which would be this one, selling in here where we are now, your risk is it goes back to here. But that's, again, this is where scalping might get interesting. You say, well, I think there's upside risk, but technically this is where you would reshort, and maybe on a longer term basis, this heads lower. Okay. So now when you're at that line, you drop into smaller time frames and you trade it. And when you get the down up, you take it and then you put your stop above that. And now you're risking, you know, little, you're chopping it down. Don't ask FX. Yeah, these computers behind me. I just haven't had time. I just haven't had time to fix it. It's funny. And I'm just looking out the window here. We have a blue heron, great blue heron that's moving in and nesting in the backyard. Dude, I was outside the other day drinking coffee, super quiet. It was really early, right? And I'm sitting there, still as can be, and I'm kind of lost in thought. And a 4-foot tall bird walks by. Like, hey, Captain. Yeah, is that what you guys think? But anyways, so he's there. He's eyeballing me. Are you looking at me, boy? So, anyways, that's where, you know, scalping could like how I like to do it, because it gets me into a little bit more dangerous trades without risking too much. And I call them dangerous because you assume or believe it may change direction based on your longer term analysis, but it hasn't happened yet. So there's a little bit of guessing involved, right? So the way you mitigate it is you either have a giant stop, which is never fun, or you micromanage. Because you can see this is up, up, down, buy, up, down, buy. All of this is easy. And now you're selling? Where? Here, right? Remember, we created this based off of the role reversal. So even though this is up, a scalper would say, this is where I want to get short. Okay. But does this look like a good shorting opportunity? Well, a little dangerous, right? So now you got to get involved and micromanage it down. And you'll feel a lot more comfortable if it makes a lower low than a lower high, and you just rinse and repeat this type of scalping, right? So this type of scalping, if you've known me for years, you're buying 5A crosses, taking profit, buying 5A crosses, taking profit, buying 5A crosses, right? And that's just straight out of my book from 100 years ago. Most people don't know it, but Abraham Lincoln was a currency trader, and I taught him as a young man. After law school, he wasn't sure what he wanted to do. Eventually made enough money, he got into politics. That is all funded by his currency trading. Yeah, true story. Like gold in Ghana. No, a real true story about that. The former Prime Minister of New Zealand got into politics because he made so much money from being a currency trader. That is true. The other one, Abraham Lincoln was not a currency trader. Yeah, he was president. He was an attorney, but he was not a Forex trader. But you should, yeah. But yeah, the former Prime Minister of New Zealand, like recently, like 4 years ago, the Prime Minister of New Zealand was a currency trader. He got into politics because he could afford it. He's like, I want to change the world. John Key, yeah, yeah. So, yeah, back when you did currency trading over a phone while you smoked a cigarette in the office. Yeah, probably cocaine for lunch. All right. So, anyways, in going the reverse here, could you suppose this green zone is a bottom for the week on this euro yen? Yeah, sure, right? I mean, that's why it's there. Now, it means different things to different people. But if you're a scalper, you could assume that green zone acts as support. So a scalper now could be doing things like, well, first of all, I prefer to have the reversal pattern, not assume the reversal pattern. So I generally don't like buy first touches of zones, but like a double bottom is something predictable, right? And soon as it pops back up, right, you could be a buyer. How do you decide when to buy? Maybe it's a 5A cross. Okay. How about this? Let me adjust it properly. Where's the middle? Okay. This is the other one. Breakout, pull back. That's another way that I do it. Right? Breakout, pull back. Breakout, pull back. That's all part of scalping. In particular, if you do it on smaller time frames now, because now I break it and you can see 5A cross, take profit. 5A cross, take profit. 5A cross, right? That's straight out of the book, isn't it? But it's still based on longer term analysis. Basically, swing trading targets that predict reversals. And then you're just hot to go HOTTOGO on the small price action, right? Okay. Here's that pound Swissy. Oh, the gold. Neat, huh? Look at that. So look at some buffoon last week put an arrow up. It's a confluence of monthly and weekly targets. It's the monthly conservative bearish target, weekly aggressive bearish target, which tells us market participants may take profit, right? Now, it went from 24 to 20, it's only 100 pips or something. Now, if you're a bear, okay, if you're a bear, it's time to prepare to sell. Or you walk away. Because you'll notice, again, Friday, at the close of Friday, we were within like 2 pips, 3 pips of the monthly target for the month. If you were doing your job as a bear, you're taking your profit and you're just like, done. I'll see you middle of July. Or I'll see you the middle of June. I'll see you at the Fed meeting. Right? I'll see you Mutual Fund Monday. Mutual Fund Monday is the Monday after non-farm payroll. Sure, Hojo. You got to be careful because I don't. My intention is never to talk you into a trade. So, in this example that I just went over, if you were a bear, and you can see earlier we were hoping that it would rally up and then head down. But you can see even 3 weeks ago we were talking about it coming down to this price. So now we hit that price. 2 things. Take your profit. And if you're going to try again, you're going to try it again up here. And that's where we are now. So you might be shorting, but you're probably better off just going on vacation. In a bull, well, you got to be careful because you're buying in a falling market. And that's never a good idea. Unless you believe we're range bound, that doesn't look that range bound to me. Okay, this, if you don't remember, this was based on this type of analysis. We were at support. I said it could do this and then head down off of this. Okay, and eventually all it did was follow the moving averages. So now keep this in mind, right? Because moving average. Use of moving average for trading, down, 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 up to the 21, down, and you dump it. Back to the 21, you dump it. Back to the 21, you dump it. We've sort of breached that area, which I think you should get ready for consolidation. So it might actually wait for the 55 to knock it down. Then we come back down and double bottom, and then maybe whatever. Okay? I think we did pretty good. All right? I think we did pretty good as far as watching support and resistance and preparing for it. Okay. Now the bounce that could have taken us here could have taken us all the way to the top. And then this was an example like let's say it bounced here and it went beyond this. What if it went up here? And this leftover here is if it broke out, then you would buy it. So I think we were talking about bullish breakouts. But you wouldn't be talking about bullish breakouts down here. So most likely it either stays falling or it gives you a pull back into resistance and then you drop it again, right? The 4-hour, if you notice this, says it's more likely to fall than rise, so you need to use that information as you see fit. Okay? Peso. Okay. Okay. Peso. What direction is our trade? Well, last week when we talked about this pair, we talked about it already being a little bit over, in this case, peso would be overbought. So we didn't like that, so we needed the peso to fall, which is tricky because what we mean by peso falling is the USD peso rising. So we wanted this to rise either here or here in this cluster or here. We wanted it to rise so we could sell it. That's not amateur thinking, is it? An amateur is thinking, oh, it's falling, I guess I should sell it. The professional says, I want it to rise, therefore I can sell it. So why would it fall? It looks like it's rising. Well, shortly, right? So in the next 72 hours, okay, in the next 72 hours, $2.36 billion will be transferred to Mexico. US dollars will be transferred to Mexico in the next 72 hours. So you might want to front run it. Okay? So you can guess and just throw down a trade blindly, but once again, you'll never succeed in the long run. Or you look for various levels of resistance in which you will consider selling, wait for price to go up there, then drop into smaller time frames and look for reversal patterns, with the assumption that that reversal pattern is the first of the tiptoeing of the 2.36 billion into Mexican peso strength. Okay, so like for example, this was the beginning of May, and if you just threw down a trade because Wayne told you to, oh Wayne's Mexican peso trade, well then you got punished because that's stupid. Okay, but there was resistance up here. You'll see it even got, it played out twice. So in this case, I don't recall why it took so long. Might have been where Friday is, because some people get paid on the first of the month, some people get paid on Friday. So this one, when's the first of the month? Is it Thursday? Yeah, Thursday. So some people will get paid here. So I think you'll have a strong Thursday and Friday, and it would be compounded if non-farm payrolls was disappointing and people start thinking about the Fed pulling one rate hike off the table. That would weaken the dollar, and suddenly your USD peso would drop like a ton of bricks because they're still gonna transfer the $2.36 billion. So the peso will get strong, but relative to the dollar, I don't know. Maybe relative to the Thai baht, but you don't trade Thai baht peso, right? So the perfect storm is a non-farm payrolls that produces a weak US dollar at the same time that 2.36 billion is being transferred to Mexico. You get a double whammy in your favor, right? Big money, no whammies. Stop! Right? So could work out great. And you'll say, Wayne, you're a genius. I know. But then what if these things don't happen? What if the US dollar gets really strong after non-farm payrolls? Then you come back, you're like, Wayne, the peso didn't do that good at all. Like in here, right, where the peso went up for 3 or 4 days before dropping. You'll say, Wayne, I'm like, well, yeah, the dollar's strong. It's a reserve currency. The Fed said, so just play it smart, right? Once again, back is the incredible rhyme animal. This is looking interesting. Okay, you got to pay attention to the price action. It's supposed to go up if it's going to go up. It's supposed to go up now if it's going to continue. Now it is like us, we know we're getting to the end of the month and all that kind of stuff. Maybe that it's a good time to book some profit. La-di-da-di-da. What if the dollar does get weak? Then this would go up. What if the dollar gets strong? Super ripper hot non-farm payrolls, which wouldn't be that shocking. Okay, but technically, let's go into here. So people are still playing the monthly pivot, which is weird because we're like 48 hours away or 24 hours away from new pivots, right? 36 hours away from new pivots. So to me, they're less important, but it seems to me they're playing it, but they're also playing the weeklies, right? So a weekly swing trader would say, hey, brah, this is heading down to 1, 2, 4, 6, 4, 5. Okay. And for those that don't use pivots, they'll say, oh, it's going to come down here, which, so it'll dip down and pop back up, and everybody will be happy. But if a bull wants to buy it, they have to do it now, where they're stupid, lazy, or stupid and lazy. Okay. I'm not saying you should. I'm not saying you shouldn't. But if you were a bull, that would come into play. This area here is a buy zone. The 200 is a neutral. This is a roll reversal. Okay. The only thing is if you've decided or not. Would you throw down a trade blindly like this? No. So once again, this is where scalping gets involved. Okay? Scalping is like you say, this will go up because I'm a bull. I'm not saying that. If you said that, you're like, I'm a bull, this is going up, more dollar weakness. Okay, great. So now you got your zone, which it may go up. Your tolerance is down to the 200 on the hourly chart. Okay. So now you say, beep. How about this? You buy 5 crosses up. Either on the 5-minute or the 1-minute. You got it? There's something psychologically cool about scalping. because it's instant. You pull the trigger and like, oh, I'm already at break even. It's been 10 seconds, right? And the thing is, you also have to be strong, right? I was giving a young entrepreneur about a 1 hour motivation discussion, anyways, and she's like, well, I'm still afraid of the no's. I know I'm supposed to be tough, but it's, when people say no to me, the rejection's hard. I'm like, why? I love no's. No's are great. No's go away. No's don't waste my time. Right? This is the instant gratification scalping. It's like you've made the decision. You want to buy down in here. You drop in there. Boom. But if you don't trade, great. Easy. Or, I know what I want to do. The rejection, right? So with scalping, you buy it here, and then it doesn't work out. So then you buy another one, and that doesn't work out. But the third time, right? That doesn't work out. You guys know the castle, Swamp Castle? They said I was daft to build a castle in a swamp, but they built it anyways. But it sank into the swamp. So I built another one. It fell down and sank into the swamp. Third one caught fire, sank in the swamp. But the fourth one held, right? Scalping's the same. Like, the first one didn't work out. The second, because you're early, right? You're early. But once you catch it, then boom, and it's great. Like if you got like a big move going, you can really quickly scalp yourself into like 7 trades, and you're jamming stops on all of them, and you just step back. It's like a poker player where they put all their chips in and they snap and they're like, "That's it, man, I'm out." Woo! I got all my money in the pot. Oh, right. I do that too, where I'm like, wham, 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 wham. Stop, 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 stop. Woo! Right? Pacing back and forth. And I come back, and they're all up 20 pips each, and I'm like, I'm up 100 pips in 9 minutes. And I don't know, sometimes, right? But also you have to be cool if they come in all the way back down, and you're like, B-E, 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 B-E. Rich, never heard of it, but it sounds like it sucks. All right. Two reasons. I know you don't need anything more than what I teach you. That's a fact. I honestly believe that. And second of all, I love you, and I doubt that they do. So whatever it is, it sucks. Because there's nothing better than love and knowledge. Okay? How are we doing on time? What's going on, bro? I guess maybe one more kitty cat. Okay. So this will come down to your oil play. Do you expect lower? Now, last week you can see I was supposing we would get down to monthly support. Okay. And it just happens to be the weekly low target. So, are you still a bear in oil? I mean, for the next couple of days. Yes, Rich. Rich, and in fact, we're coming up to that. So, let's talk about that, because someone asked me about doing a scalp course. Maybe I should do one, because in the summer, I think it's best for scalping, not because you have lots of volatility, but it's what I call income-based trading. Okay, there's no wealth to it. You're never going to get rich scalping, but it does earn money. And in a time when big trends kind of get exhausted because there's nobody really around to push these big trends, while we kind of wait through summer, scalping is the better way to make money. You're just not going to make a lot of money. Where people go wrong is they get frustrated and they try to push the market. And the market's heavy because nobody's in the market except you, and you're trying to push it. So they overtrade it and they expect too much. So like in a situation where you're quickly up, 100 pips, they're thinking, oh, it's going to go up 300 pips. Not in the middle of July, right? So in that case, I like to take my money and run, right? Know when to hold them, know when to fold them, know when to walk away, and know when to run. That kind of stuff, like hit them hard, hit them fast, and then get out, right? Sort of the terrorism of Forex. Hit them hard, hit them fast, get out, hit and run. But I call it income-based trading. When I'm swing trading, or like in the second half of the year, like in September, October, November, right? I'm trading on a wealth-based strategy, not income. I don't care about income. So maybe I should do that. The seasonality is in the swing trading, right? So what I'm thinking, again, I'm thinking out loud. Maybe I can do a scalping course so that you could scalp. That might be helpful. When would I do it though? Well, let me ask you this. How many people would be interested in paying money? Okay, listen to me now, because now everyone backs off. Oh, I don't have any money. Okay. How many people would be interested in paying money for a scalping course? Here we go. One person, maybe. Nobody. Yeah, Rob's like, within reason, like, Boris and Kathy have a scalping course for $7. Oh, wow, must be valuable then, huh? Yeah, Heidi would. It'd be a ton, Rob. It'd be lots of money. It'd be ridiculous. Yeah, all right. Not because I'm smart, but because I'm pretty, and pretty people just make more money. So I don't know, but not cheap. I don't want it. I don't believe in cheap. But anyways, nah, not 3K. 30K? No, I don't know. Yeah, I see. To me, it's like time, man. I want it. I want to do it for you guys. But when the hell do I have time? But I'm thinking out loud. Like, I know this webinar is going on too long. I should do a scalping course, bundle it all together. So there's scalping, there's fundamentals, and there's swing trading, and it's like a whole summer school thing. So while I'm away at Harvard, you're doing like 40 hours of video training. And you're just like, it's all consumed, all one big bundle. And you're like, oh my God, there's so much. But now you're at school. I'm at school learning about gender and race inclusion, I think it's called. And you're learning scalping, swing, and fundamentals. Yeah. Yeah, Horace. Yeah. All right. So, and Horace's feedback is, I appreciate that, Horace. Yeah. Yeah. So I don't know. Let me think. Let me try. Let me try. And I'll discuss it with TradersWay because I want you to help, but also like I want you to open an account there. I mean that's it, right? So that's why I want like maybe I'll hook it up so if you're a client to TradersWay, you'll get an awesome summer school package deal. Middle of June to middle of July, Miles. Yeah. Here's the dining hall. That's where I'm going to be eating breakfast, lunch, and dinner. Yeah. So that sounds cool though, man. That sounds cool. Let me think about it. Let me think about it. Is that right? Yeah, okay, Horace. I mean, yeah, that carries a lot of weight, Horace. Since I mentored you, and you know what you know. I mean, right? So that's cool. Yeah, isn't that neat? Are they called? They're called hammer beams, Nick. Yeah, it's great. Like how you take the arc, and then it's held up by another arc. The arc of an arc, right? It reminds me of like the Blue Mosque in Istanbul, which before it was Muslim, I believe it was Christian. Hammer beams, huh? See, I have to drop that now. Where I'm sure I'm going to walk in with my cohort, and they're going to say, "Damn, look at this place! It's amazing." I'm like, "They're just hammer beams. It's just a trick." Oh, hammer beams? Really? You're impressed by that? Jeez. My garage has hammer beams. Where do you live? Do you have a carport? Yeah. Yeah. Oh yeah, Charles. I'm definitely one of those. So, anyways, you know what? Gee, I have so much to think about. So I have a choice. Like, I can take my children kayaking, or I can stay home and design a scalping course for you. It's so these are tough. I mean, there's always something, right? So, I don't know. So, anyways, I love you. I want you to succeed. I also want you to open up an account at TradersWay. So, let me think, Ron. Let me think about it. Okay. So, peace on earth. May the pips be with you. May our profits be above average. And thank you for being here every day. I do appreciate that. A happy wife, Brian? Like a unicorn? Brian's like, whatever makes your wife happy. I'm like, that is funny. That's a funny joke. Yeah. Yeah. All right. Take care, guys. Thanks for hanging with me. Cheers.